So interest rates have fallen to 4.5% and they're predicted to fall even further during the course of 2025. We're all celebrating, aren't we, John?
I don't want to sound a bit like a grumpy old man, because that's normally your department, Ranjan. But I have to say, so what?
Yeah.
So what? The amount they're coming down is pathetic, 0.25%.
But John,
it's hardly worth mentioning.
But John,
the paperwork. Sorry, go on. Yeah.
All the committee people voted unanimously for it.
Yes.
And 2 of the committee people voted for a 0.5% cut. And everyone is pretty much saying that it's got to fall by another 1, possibly 1.5% over the next 18 months. So the direction of travel.
It's the sentiment that's important. The sentiment is the markets are coming, the interest rate, the markets are coming down. Now, I've got no time for the governor of the Bank of England. I think he's a bloody idiot. And when they predict something, it never happens. So that's the good news for Rachel from accounts, because they've announced that growth is going to be minute this year. Well, I don't listen to what they say, because they never get it right. How on earth they're all those massive brains get everything wrong, I do not know, but they do.
Well, but lunatics running the asylum.
Well, there you go. But 2.5%, 0.25% is absolutely nothing. The good news, though, from what you've said, is that two on the board are sensible and think that a 0.5% cut would be better. 0.5% cut tells you a totally different story. It means we're open for business. We want to cut the rates. 0.25 is pathetic. If you want to make a splash, make a big splash, not a little one. If you're going to bring it down another 0.25% in 2 or 3 months, do the bloody thing now.
That is a good point, because if you look at what's happened, is that some mortgage lenders actually cut interest rates the day before the decision and a couple of days before the decision. And the market, particularly for fixed rates, is factoring in more cuts to come. So why not get it done straight away?
I don't understand it. I did a piece on my YouTube about if you're a cautious person, the mortgage rate last month there were some good deals about. So they'd already factored this in already, priced it in, as they say, with the stock market. It's all they've made a fortune this year, but it's already priced in. So the bloody shares don't go up, do they? In fact, every time I look at a share, it goes down. So do not trust me with shares, that's for sure. So I was suggesting to some cautious people that have got a mortgage coming up for renewal and all the rest of it, and there's still 1.5 million people, by the way,
yeah, of course,
who have got who need to coming off fixed rate mortgages.
It's a good time to come off this year, I think.
I think it's good timing, and I did say that some of them may want to fix now rather than leave it to the turbulence of the market. We've got Trump, we've got Rachel from accounts, we've got little growth. I mean, I don't want to sound negative, but there's Gaza still not quite sorted. We've got Ukraine not sorted, but that might be this year. So there could be some really good news this year, but there could also be more of the same. And at one point they were saying, with the predictions end of last year, well, look, we're going to get 4 interest rate cuts. Of course, that all depends how big they are this year. And then in January, some people were saying, well, we're not going to have any. Or they're going to go down, then they're going to go up. I think I predicted they're going to go down a little bit, and then they're going to go up, which could happen with inflation later on in the year.
Shock horror for our regular viewers, because I actually agree with you, John.
Well, that scares me, because that makes me think I'm wrong. That doesn't make me think I'm right. That makes me think I'm wrong.
Well, let me know what you guys think in the comments below.
Are we right or wrong? Are we right or wrong?
But I think the thing here is this. There's a lot of... The reason why the direction of travel for interest rates is on the downward is because growth is non-existent. Yes. Rachel Reeves' budget was all about growth. It's delivered completely the opposite.
Crazy.
The Bank of England, and this is the thing why I agree with you, people should think about fixing now and not chancing it later on, is because the Bank of England have halved the growth forecasts for this year.
Yep.
But the key thing is coming out on the 26th of March, which was the OBR report. Now, that's the official one. And they are
Do they know what they're talking about, though?
Well, that's the official one, whether they do or not. But they are widely tipped to slash their growth forecasts for 2025 and 2026. And that puts Rachel from accounts in a very tough position, because she's either got to go all Elon Musk and cut public expenditure, and there's no chance of that happening, or she's got to raise taxes, and who's she going to raise them on?
We know who people watching this show
exactly
are going to be paying more, one way or the other. They've got to pay more tax,
and that will put growth. That will just have the opposite effect on growth.
Yeah.
So we could be, and the other issue, which not many people are talking about, is that inflation is likely to stay a little bit stubborn with all these supply side costs. So this is, whenever we've had a lefty government, we've always had stagflation. There was stagflation in the 70s with lefty socialist policies which don't work. And now we're heading for that again. And stagflation is where you have stagnation of growth and high inflation, which really shouldn't happen.
It shouldn't happen, but most people who have been around a long time say that under a Labour government, it's never been too bad for property because you do have that inflation. But I mean, like you say, this time I think it's different. And the other thing to remember for the developers watching the show is that if you're on a bridge, you won't get an interest rate drop. You're not going to get an interest rate. If you're on a bridge, they're not going to ring you up and say, good news, it's going down 0.25%. And by the way, putting a loan down 2.5% probably costs these building societies more money to send out letters saying you're now paying a less, £42 less a month than it's worth to them. But they've got to do it. It's a nightmare for them, an absolute nightmare. But that's what you've got to remember. And I was talking yesterday, I had breakfast with a very successful house builder yesterday. And he was saying to me, John, and I said, how much do you pay for your funding? He said, 5.25%. 5.25%. I said, well, what do you think about the guys having to pay 12%, which we have to do sometimes? He said, house building, if you're a proper house builder, there's no way on this earth you can build houses which take start to finish, might be 2 or 3 years, and pay 12% interest rate. It's just not possible. He said it's hard when we're borrowing at 5.25%. So isn't that interesting? Amazing.
Very interesting.
It is though, isn't it? Because we were borrowing money at 5-6% 4 years ago. Now we're at same as everyone else, 11-12%.
So I think, we've got this situation where the interest rates are coming down because of all these uncertainties, economic uncertainties, domestic issues to do with growth, and all these international issues, Trump and his tariffs and all of that. So a lot of uncertainty.
A lot of turbulence.
To come. But if you've got existing portfolios and you're coming at the end of fixed rate lock-in now, if you're on variable rates, that's good news, and it's a good chance to sort of lock in. So your cash flow will improve. But what do you think about the effect on the property market? I mean, in terms of first-time buyers, people buying houses, it makes property more affordable.
It does
and there's a shortage.
It does make it more affordable, but as I said, a lot of these interest rates have already been priced in by the building societies already, and lending, and actually the headline is, oh well, you can get a mortgage at 4.25% or something. You read the small print. The small print will say that's if you've got a 50% deposit or something stupid like that, or if it's an investment loan. Oh well, we need 100% cover. In other words, if the rent is 10,000 a year, then the mortgage payments cannot be more than 5,000 a year. So that means they're not lending you 70% loan to value. They're probably lending you 45, 50% loan to value. So, the small print is what it's all about. And do not get sucked in to paying what looks like a very cheap loan and then find out it's £10,000 fee for doing it, because you've got to add that fee on to the length of the 2 or 5 year loan. You've got to add that money onto every month's repayments to make it look and compete with another loan. So, There are a lot of monkeys out there.
You're right on that, because I mean, I think it was in the late 70s or early 80s they brought in the APR as a way of trying to be able to compare and contrast loan products.
Yeah.
But that just means jack shit these days, because it's more confusing.
It's not usual for you to swear.
Well, it is very confusing to compare loan products.
You're frustrated, I can tell, and rightly so. And our language
it
on this show is normally very, very good.
We'll bleep it out. But it always needs an Excel spreadsheet to compare loan products. Yeah. And it shouldn't really. It should be a little bit more clear than that.
It shouldn't. And I am concerned that, well, the hype's good because, I mean, our estate agencies, we've got off to a good start in the year. We've had a few sales fall through, but we are selling. There's certainly more activity. And I think, as we predicted for this year, hopefully that will continue. And this can't do any harm at all.
But would you say that, I mean, growth is flatlined, and with the changes Rachel made in her budget, people are taking on less staff and they're firing more staff. Yeah. So I think we've got to look at the jobs figures, the unemployment figures, and that will obviously have an effect on the housing market. A huge effect,
Ranjan, because it's confidence. And if you think you may not get that pay rise, or you may not get that promotion, or you might lose your job, the last thing you're going to do is go from a 3-bedroom semi to a 3-bedroom detached. You're going to wait.
Yes.
And the other thing, which is interesting, that a lot of people don't think about, is car finance. Mm-hmm. So a friend of mine runs a big car finance company. Since the budget, he would normally finance something like 100 cars a month, okay, for clients. He is now only doing 50 a month, not 100. So that means that car sales, which I think is a great barometer for the housing market, because it's instant, and then whatever, cars are instant, property's 6 months to a year behind. So the car market is sluggish. And the other thing people are doing, they're not selling their car, but they're refinancing it. Now, when someone is refinancing an existing car loan, you know it's tough. You know it's tough, and because they are struggling to make repayments, and they're worried about the future. So you've got people refinancing a current car loan. That's serious, Ranjan.
And of course, the cost of moving is going to be more after when we get to April the 1st, because the stamp duty thresholds are halving. I mean, it's 250,000 before you pay stamp duty. Now it's going to be 125. Yeah. The first-time buyer advantages are getting lost as well.
You'll be able to buy that nice flat for 110 grand that you live in, Ranjan, won't you? You'll be able to buy that rather than rent it.
Do you reckon there's any chance of
as if
Rachel coming out in her March statement and saying we're going to extend these stamp duty thresholds to encourage the
I don't think there is, but I do think they're going to. Well, I just don't think they're socialists.
Yeah, it's too much common sense.
They're socialists. Everything they've done so far, they've got a real problem, because everything they've done so far is really anti any Conservative voter, basically. Let's be honest. And the Conservative voters are most of the people who are entrepreneurs, who are deal makers, employers. They're the ones they've hit hard. So they're the ones who are going to be less ambitious, going to employ less people, take less risk. And that's their problem. They've got a real conundrum, because they need those people on their side, but they can't bring themselves to say, you know what? Why don't we do a similar scheme to what we did in the 1980s,
Listen,
90s?
I know you love the Conservative Party, but I've got to tell you this, right?
I haven't finished what I was saying.
No, let me
I'll come back to it.
Go on.
I'll just finish it.
Yeah.
In the 1990s, there was a business expansion scheme.
Yeah.
If you remember that, you're young. You're old enough to remember it. And if you invested it into residential property, which could not be sold for 5 years, you got 40% tax relief. Now, they need to do dynamic things that I wrote about. You weren't here, you were probably abroad, but I wrote a piece in the Daily Telegraph about it. And, they asked me three quick things they could do to help the property market. One of them was business expansion schemes, bring back tax relief for high net worth individuals so they invest in residential property. Now, are they going to do that? Of course they're not. Because why? Because they're totally against any high net worth individual, of which 10 million millionaires have left the country. And these millionaires, 10,000, sorry, these millionaires they think 100 million plus. No, they're probably 5 to 10 million plus, and they probably spent 150 grand a year on holidays, doing the houses up and everything else. That's a massive blow to this country.
I think they don't understand the value of those people. I don't think they understand the value of those sort of schemes.
No.
And the other thing, of course, is that I'm not really sure how many of those people have the confidence to invest in this sector anyway, given the rules and everything that have changed. That's another issue. But I think the problem that we have as well, which is I was about to rudely interrupt you.
Ramjan, that's fine. That's fine.
But
you don't often apologise.
It was
make the most of it.
It was the good old Conservatives that brought in the 3% surcharge on stamp duty. Which I think is ludicrous, because why, if you buy a property to rent out or you buy it in a limited company...
Why are you punishing people who are doing society a favour?
Exactly.
By renting a property to people who haven't got a property. It's madness, and I completely agree.
So the Tories thought of the idea and put 3%, and Rachel Reeves only added 2% to it.
Yep.
So who started it?
Well, it's like inheritance tax, all these things. The Conservative government over the last 14 years, we now appreciate, unfortunately, how disappointing they were. And I was sat next to a Tory MP at a lunch the other day. I won't say who it was. And he said the same. He said, we've been a shower of you-know-what.
Do you think the Conservatives will reform?
Very funny. I think a few will definitely reform. Once, if they think that Kemi can't get them back elected, they will jump ship without question, but it's too early for them to do that yet.
Okay, I think that wraps it up for this episode. Interest rates are going down. There's lots of trouble ahead. If you've got existing buy-to-let properties or mortgages, you're going to benefit from that. And, we're not financial advisors, but I think we would be recommending fixing your borrowing rates now rather than later. That's about it from John and I. If you've got any other comments on what we have said, or you've got any questions that you'd like us to answer in future episodes, let us know in the comments below. That's all for now. See you guys next time.